We'll get started here in a couple of minutes. Hey, love seeing all these faces on here this morning. We'll get started in just a couple seconds here. I've got 8 o'clock, Tracy.
I was just getting back in because it's like says 8 o'clock on my computer. Good morning and welcome everyone. My name is Tracy Irby and I am the director at the Center for Women Entrepreneurs. Thank you all of you for going virtual today. So we had an unfortunate pipe break right above our office the Sunday after our last WomenRISE. So our offices were all flooded and some of it also got in the training room. So we knew WomenRISE was almost a month away. So we just decided to make it virtual because we weren't sure. First we heard, oh, it'll be ready in a week. It'll be ready in 2 weeks. Well, it might be ready tomorrow, but we're not sure. So if anyone's ever gone under construction, you know they never meet the deadline. So that is why we are virtual. And Darlisa wanted to really get the word out early so people would know that it would not be in person. So thank you all of us for joining us online. So for those of you that aren't familiar with us, we're part of the larger Jane Nelson Institute for Women's Leadership. The Institute is dedicated to preparing more women to take on successful roles in business and public service. Our 3 specialized centers provide women with the education to establish executive level careers, the skills for building entrepreneurial businesses, and the framework needed to run for public office. We have our whole staff on today. We have Darlisa Stinyard. She is our associate director. We have Kimberly Nielsen. She is our statewide program manager. We have Christina Mortel, our small business advisor. And we have Barbara Rankin, our program coordinator, and she also monitors Facebook. Everyone here today, if you'd like, go ahead and put your information in the chat so everyone else will know who is here. So since we're not going around the whole room as we usually do, we're going to go ahead and introduce our speaker. And I'm so excited to have her here. I have known her for years. Today we have Darlisa Diltz. Darlisa has blazed the trail of entrepreneurship with passion and force. Educated with a double bachelor's in marketing management and sports entertainment management, a master's in business administration, and a master's of science in information technology. She has played a vital role in the development of several entrepreneur ecosystems around the world, seasoned with entrepreneur education and a foundation of community development. Darlisa has provided access to close to 1,000 aspiring entrepreneurs and small businesses through her efforts. She started her journey in St. Louis, Missouri, where she played an integral part in the development of the Cortex Innovation District's tactical development team and developed the first non-school based youth entrepreneurship program, granting her her the honor of receiving the St. Louis Regional Business Council's prestigious Businesswoman of the Year award in 2014. After a family moved to the great state of Texas in 2018, Darlisa opened the North Texas Entrepreneur Education and Training Center, which was the first for-profit business service organization with a focus on entrepreneur education and development here in the Metroplex. To date, Darlisa leads various economic and entrepreneur impact initiatives globally and has one of the top 5 entrepreneur development programs in Dallas-Fort Worth. Darlisa, we are so happy to have you here today.
Thank you so much, Tracy. I am honored, one, to be here this morning. I love the work that Texas Women's University does, and it is indeed my privilege and honor to be here this morning. Thank you, Darlisa. Thank you, Christina. Thank you, Barbara. Thank you, everyone, for what you do in the community and for allowing me to be a part of that mission. So I am grateful and excited to see all of you wonderful ladies, and if there's any men on there, on this morning. Grateful. I keep saying that, grateful to the opportunity. So this morning, I am going to talk a little bit about business funding. Is that fact or fiction? So we hear this all the time in entrepreneur land, right? The first thing that comes to mind is, I need business funding. I need business funding. So I don't want to assume, but for everyone that is an entrepreneur, just throw up an emoji or a reaction on the screen. Let's see how many entrepreneurs we have on the call with us this morning. All right, all right. I like it. So you guys can sympathize, empathize, and strategize on this very, very topic. So let's get into it a little bit. My hope for today is not to give you a token to take to the bank to say, yes, give me funding. But my hope today is that I share a little bit of additional information with you as you think through the business funding component and how to best position yourself for this opportunity as your business grows and develops. So Tracy gave some wonderful information about me. Thank you so much for reading that bio, Tracy. But here's just a little bit more. So I am a wife. I am a mother. I call myself an entrepreneur educator. I do wear the ecosystem builder and community stakeholder hat. I am a Christian. I am a lifelong learner. And of all of these different things, like a couple most important, I am a lover of all things fun. And I always tell people, if it's not fun, count me out. I don't really like to do boring things. So I will admit that. So I am a lover of all things fun. Most importantly, I am an everyday person. I have ups, downs, highs, lows. And so I too wrestle with this conversation of business funding as a business owner myself. So I can definitely understand when having these conversations, the different frustrations that come about. So this morning, as I mentioned, we're going to talk a little bit about business funding, but I thought I would break it down into these 4 sections. And I won't bore you, I promise. And I am a very interactive kind of person. So be ready to hit that reaction button here and there, right? Because I want to know how you guys are feeling about what you are hearing, what you are seeing. So we're going to talk about business funding as we know it today. We're going to talk about a few misconceptions of business funding. We'll talk about some sources of funding, and then we want to talk about some funding alternatives. Okay, does that sound cool? Let's see it in the chat. Let's see it in some reactions. Are we good with those topics? Awesome. Okay, so the concept of business funding, before we jump into the semantics of it, I'd like to kind of paint a picture of context if I can. So prior to the year 2020, when all of us experienced this faux pas of life called the pandemic, right? Business funding was viewed in a different light. Now, some of it was similar to what we experience today, but the pandemic really did change a little bit of how people are viewing and seeing not only business funding, but entrepreneurship as a whole, right? So through the year 2020 up until now, we have experienced the largest insertion into the entrepreneurial realm. And funding has become a top priority for those looking to enter into the space. Why? Because during that time, there was a lot of money given by various entities, government agencies, organizations, you name it, to support the entrepreneurial endeavors. However, prior to this time, the traditional means of getting funded were what we knew to be true, and that is traditional lending, that term grants, organizational connections, you name it. But for some reason, when the pandemic hit, it changed that landscape. And so now we view our business funding a little bit different. So let's talk about those things just a little bit. So the first thing I'd like to mention is that business funding right now is seen as a method to get started in a business or a venture of some sort. Individuals now are empowered to start businesses, follow their passions, follow their dreams, come away from the corporate structure. And so business funding comes top of mind when we think about these opportunities. Starting a nonprofit versus a for-profit. The assumption of starting a nonprofit organization is highly regarded because many people feel that this will give them access to funds at a faster rate than starting a for-profit business. However, not understanding the process of how businesses come into funding, whether for-profit or nonprofit, are not taken into consideration, but this tends to be a focus of several conversations here in the entrepreneurial scope. Business credit. Unfamiliarity of what that term really means as it relates to getting your business funded. And we'll talk about this concept a little bit later in the presentation, but this notion of business credit has come about, and it has come about in large quantities, whether you are hearing it online, whether you are hearing it in conversations, whether you are hearing it from other stakeholders in the community, but that term business credit has come up as it relates to funding your business. If funding is not granted, there's a problem with the system, right? Now, don't get me wrong. I will be the first one to say that there are biases, there are institutional disparities, there are things that prevent some from being funded at the same rate as other individuals. However, it is not always that it is a system that is keeping us from being funded or lended to. We have to understand as business owners that there are still processes in place, and hopefully through this conversation, we can examine what some of those different opportunities are. And then other ways of looking at business funding is using the working capital to increase your business practices. There is a such thing as good debt, right? So getting money added into your business, or the term using other people's money, that is a thing, right? So increasing your liquidity within your company is a positive growth strategy for your business. But again, we want to make sure that you are ready and you are understanding of what that process looks like. So these things are kind of some of the widespread concepts of business funding that you kind of hear today, especially if you are in the world of business advising or mentoring, coaching of sorts. Okay, so no one believes that there are misconceptions, right? Right? There's no misconceptions in business funding. It is all good. It is all legit. No, that is not the case. There are some misconceptions in business funding, and I want to talk about them just a little bit. Again, my purpose today is to share a couple of nuggets to help you understand that business funding process, and hopefully in the future that can help you with making some decisions as it relates to your organization. So first, grants. How many of you guys like that word, grants? Let's get some emojis going. Let's get some reactions. How many of you guys like that term, grants? We want grants for our business because, yes, that is what helps push the pendulum forward. So I want to spend a little time here talking about grants. Historically, grants were created for nonprofit organizations, right? And the reason that grants were created for nonprofit organizations is because nonprofit organizations are, if you know anything about them, they are non-taxable, right? And they go to support community-led and driven initiatives. So the grants then were provided to provide them the opportunity to work and further missions within their community. I go back to that conversation of the pandemic and how the term grants, and it's been an evolution, not just with the pandemic, but this idea of grants for business owners was that I'm going to start my business and I'm going to get a grant to do so. And it's like, there's not really a whole pool of grants kind of there for people to get started in business. Now, don't shoot the messenger, right? But the origin of how grants started was for nonprofit organizations. Now, post-pandemic, there were a lot of organizations and entities and institutions that did make grants available for business owners, and that still goes with today. However, grants are generally tied to something, meaning you're going to participate in a program, you are going to submit a lofty amount of paperwork so that individuals that are providing the grant can prove that this is a viable business, or it is associated with a mission that is needing to be pushed forward. So I am not saying that there are not grants available for business owners. However, it is very important that we understand the availability and the origin of business grants, because this misconception is driving what I call upsets in the entrepreneur ecosystem. Individuals are coming to the forefront and they are hoping, wishing, and wanting access to grants to get started. But the reality of it is that they have to understand the availability and the origin of grants. Next, personal credit. There are a lot of opportunities out there for business owners to get access to funding, whether it is lending, whether it is gifting, whether it is VC dollars, you name it. And there's a misconception that your personal credit is not impacted, or it should not be impacted. But I want to pose a question to all of you guys that are on the call. If someone was to come to you today and say, hey, could you give me $50,000? I have a wonderful idea and I really, really need money. And I would like for you to give me that money. Can you give it to me? How many of us are going to take out our checkbook and we're going to write that person a check just on the premise of a great idea? Probably not most of us. Some of us may. But I want you to understand that there is a such thing called the 5 C's of credit. And we have heard this several times, and understanding that anyone who is looking to provide funding to you for a business endeavor will look at several components of your personal credit. So yes, personal credit is a factor. And I want to tie that back to that business credit concept, right? So if I may offer a challenge to you guys, don't look at it as business credit, but more so business credibility, right? Because we'll talk about it a little bit later, but we'll talk through what lenders, funders, investors look for when they want to fund a business. And it is not boiled down to a number like personal credit, but it is your business credit worthiness, okay? And so keep that concept in mind as we move forward in the presentation. Funding solves every need. It doesn't. So we can ask for funding. We can go to individuals and they may even provide us with some funding for our business, whether it is in the startup phase, whether it is in the growth phase, or whatever phase you are in. However, if you have not established a strategy or a plan or some use of how these funds are going to grow your business, getting that funding can sometimes be obsolete, right? Because you're going to find yourself in another situation where you're going to need funding again. And it's not because you don't have a good business. However, you haven't decided and you have not put together a solid plan for what your business will do with those funds. So funding does not solve every need of a business. Sometimes you don't even need to get funding directly, and we'll talk about it, but you need to establish what that business will do and how it will make money on its own. Next, the misconception that lenders do not want to lend to you. So I want to paint, and I want to give a little context there. As I mentioned earlier, I am not saying that there are not factors that limit some individuals from getting funded. However, that is how they get paid, right? So the notion that they don't want to lend to you, it is a little more extensive than that. Of course, if we come to a lender and our credit score is a 7 and we haven't generated any revenue within our business and we don't have any other forces giving us access to income, no, they don't want to lend to you. But it's not because you don't have a good business. It's because at that time, you're not ready, because how they get paid is on the payback of any type of funds, right? So I want to dispel that myth that lenders don't want to lend to you, because they do want to lend to you. However, they want to lend to you if you are a good prospect to pay the lender back, okay? And we'll talk about that a little bit deeper here in a bit. And lastly, I want to make mention of this process of certifications, right? How many of us are certified on the call? And it's no good or bad, if you're certified or not, but there is a misconception that if your business is certified, that it is a guarantee of funding. So I want to say that is a misconception as well. Certifications provide another layer of access and benefits for businesses. However, getting funded is not one of those things. So just want to make sure that you guys understand that that is not a direct pipeline to your funding. So hopefully I was able to kind of talk through some misconceptions. We know that there are several others out there. And I just kind of want to make mention that there's not a pot of money that's sitting and waiting for individuals to access entrepreneurship, right? Because if that was the case, we would have ran out of that pot of money a long time ago, right? So just keep that in mind as we move through the conversation. Okay, investors and crowdfunding, it's not an option for all businesses. Now, I hear on a day-to-day basis that I'm going to get an investor for my business. I'm going to look for someone to connect with, and they are going to partner, right? And I don't want to be the bearer of bad news, right? But when we talk later about what investors look for and the opportunities for those things, you have to understand that there are complexities that come with these types of endeavors. And so if you are a company that has not generated a lot of revenue, that's okay. But the expectation that someone is going to invest, now you could find what's called an angel investor for your business. And again, we'll talk about that, but that is not an option for all businesses. So I want you guys to keep that in mind. So again, these are just some of the misconceptions that I hear on a day-to-day basis. So, okay, now that I've told you everything anti-business funding, right? Let's talk about what some of the sources of funding really are. And I was super grateful to find this graphic that kind of outlaid all of the different capacities for business funding in today's landscape. And I did provide I'm going to provide the slide deck with Texas Women's University, so you can have this as well to look at these opportunities a little bit further. So let's just kind of talk high level about all of these different sources. So when you look, what is the first thing that is on this list? It says self-funding. Self-funding. So I want you guys to understand that as entrepreneurs, when we are entering into an entrepreneurial venture, we have to understand that this is a self-driven opportunity. We are saying we want to take on that risk of entrepreneurship. Now, that doesn't mean that you have to have a whole lot of money and you have to, be heavy capital vested. But you, as the individual, have to have some type of skin in the game to move your business forward as it relates to funding. We all know traditionally there are loans that you can get. There are different levels of loans. You can get bank loans. You can get lines of credit. They even have like credit cards and things of that nature that you can access depending on your personal information and credit score and your debt to income ratio. They have on here family and friends, and I sometimes shy away from this concept because it works for some and it does not work for others. Family and friends can be an avenue for you, but if you don't have that, it's okay, because you can still build, grow, and develop your business without that. There is that term grants, right? And if you see up under here, it says government and universities, right? And if you have done work or business with any of these entities, you know that that process can be a little bit strenuous, right? But there are grants that are available, and I'll talk about a few at the end. There's crowdfunding, and crowdfunding is a newer concept that has come about probably in the last 7 to 10 years or so. And crowdfunding, you know, those are your Kickstarters, your GoFundMes, your Indiegogos, those types of ventures where you can put a compelling story out there for stakeholders, and then they can donate to your cause. You have angel investors. The difference between an angel investor and a venture is angel investors are typically entrepreneurs themselves that are looking to connect, and they see a business venture that they believe in and they want to support. However, there are definitive lines and red tape that goes along with those, but angel investors are opportunities for you to gain business funding. You now have incubators, accelerators, another term is cohorts, and programs that you can participate in. And those typically come in 4, 6, 8, or 12-week stints. And there is a process to help you grow and develop that business, whether it is through business plan development, whether it is growing from a marketing standpoint, or they are nurturing the business step by step so that you can approach a potential funder or lender at the end or completion of the program. And then you have venture capital, or what is called equity funding. And when you kind of go into that lane, now you are giving up ownership of your business. So most times when there is some type of venture funding, there is a percentage of business ownership that comes along with that. So in this next slide, I will not read through it because it is a lot of information, and you will have this information to look at as well. But this just gives some pros and cons of all of those things that we just kind of talked through, right? So if you are self-funding your business, what are the pros and cons to that? It talks a little bit about the venture and the VC funding, the crowdfunding, how you can kind of look at those different opportunities to see which one may work best for you. There are different types of loan structures that you can capitalize on, from micro lending opportunities all the way up to your traditional lendings. So when I talk about the term micro lending typically comes in lower dollar loan amounts with higher interest rates, right? So if you can satisfy certain criteria to get approved for this type of funding, then your interest rate will probably be a little higher. However, for some, it is beneficial if you just need that amount of money to get you over a hump or a threshold. I believe $25,000 is kind of typical of that micro lending soft spot of where most entities don't require a business plan. If you go below 25,000, you can get lines of credit. As I mentioned, I've seen lines of credit that do surpass $25,000, but with your lines of credit, you can approach your current bank, right? So if you have a bank account that you have used with an institution for several years, you can approach them and you can say, I'm starting a business. I'd like to start my business account here. And a lot of times your personal banks will give you a business line of credit. The business line of credit is super beneficial because as you pay it, that money comes back. So you're able to get into the habit of spending and recouping. So you can put that as a line item debt on your balance sheets and things of that nature. When you start moving into more traditional lending where they are providing cash, that's where a lot more of the red tape comes in. So they do like to see business plans. They want to see your business financials. And typically banks or lending institutions want to see that you have had 2+ years of cash flow or what is considered liquidity in your business. Now, if your business is liquid, right, meaning you do have money that you are able to pass, and it could be a small amount, right? It could be $10,000 that you are able to pass. You can't go to a bank and ask for a $100,000 loan if your business is only profiting $10,000, right? Because what is the payback on that size loan? But that doesn't mean you can't go and ask them for a $10,000 loan, right? Because again, we have to understand that banks are in business to make money also, and they make money on the payback of debt. So as you are thinking through your options, there are several to consider. And at the end of this, I will show some information on a couple of organizations that you may be able to tap into to either ask further questions, or they can help you through the process of aligning yourself to get this funding. Okay, so what is it exactly that lenders and funders, investors look for? The first that is going to come is your requested amount and what your personal cash flow or liquidity situation looks like. So if you are just starting out in a business, if you have zero income, that's an instant red flag, right? Now, again, that does not mean that they don't want to lend to you, but you have to understand that they are looking at the risk of payback. So if you have a job, whether it is part-time, full-time, whatever the case may be, that's a benefit, right? Because now you can show that you have an income source that can support your startup venture. And there is nothing wrong with having a business or a job while you are trying to start your business, okay? So one of the first things is your requested amounts and your cash flow. Second, they're going to look at your length of time within your business. So if you are fresh out of the gate, well, we don't know if this is a viable concept or not, right? Will you decide next week that you don't want to do this anymore? So now you have people that will have given you money, and then you can just decide, nope, I don't want to do this business anymore. So then what happens with the funds that they have given? So the length of time in business is super important because they want to know that you have proven that concept at least past ideation, and that you are working towards growth and development of that business. Now, going back to startups, if you are a startup, there are opportunities for you to get small lines of credit, or for you to participate in a program where you can get grant dollars as part of your participation in that program. And the benefit to that is that you will also learn how to grow and develop that business as part of that process. Next is use of funds. So you have to be able to define out how you are going to utilize these funds, right? Banks, lenders, investors, they don't want to pay for lifestyle, right? Because if that's the case, well, you can go back to work. That's what they're going to say, right? So you have to be able to identify your use of those funds, whether it is for overhead, whether it is for machinery and equipment. There could be some inventory uses. Working capital is a thing, but not to the degree of running your business for you. Because if you are using their funds to operate your business, then what are you using to grow your business? So you want to keep that in mind. And again, they do also look at your personal credit and your personal history if you are in a startup position. So let's talk about some ways that you can combat business funding. And I know that we don't want to hear this sometimes out of the gate, right? Because once we've gotten started, it's like, okay, well, I've done that already. And I'm trying. I just need funding so that I can get started. I understand that 100%. But what we have to understand is when we decided to be an entrepreneur, we knew that it was a risk, right? We told ourselves that it was going to take some time, and we have to understand that process. So the first thing I would say is look at W-2 or contract opportunities. If there is someone telling you that having a job as an entrepreneur is wrong, they're not your friends, right? It is okay to have a W-2 job as you are building that business. Now, it is up to you to determine if you still want to do a full-time job or a part-time job, but it is a revenue source because entrepreneurship is challenging, especially to jump off into it directly. So you want to make sure that you have a revenue source. I was in a conference the other day and the lady said, well, I'm not a kept woman, so I have to figure out how to generate revenue. And what she was saying was that she didn't have a spouse that had a job that was helping to support her business initiative. And so it's like, okay, well, that means you have to do something to take care of your family, to live and to sustain. So the first thing is to get a W-2 job, part-time or full-time, whatever works best for you. Then you should look at multiple revenue streams, right? Not to the degree of all these different business concepts, right? But if you are, let's just say you are a coach, okay? Look at teaching classes. You can partner with local universities. You can connect with organizations to teach classes for them as a revenue stream for your company. Maybe you write a book, right? Maybe you sell t-shirts with your logo on it and some fancy sayings. Maybe you create designs, whatever the case may be, but diversifying your revenue streams so you're not tied to just one concept. I mentioned in the beginning that revenue is your best source of funding, because if you develop a strategy to approach your customers, and that's a whole nother conversation, but if you develop a strategy to effectively approach your customers without the direct focus of money, then you will see that you will be able to successfully grow that business from a revenue standpoint to where you can then insert the funding in a positive manner. And I'll tell you guys, if you are approaching lenders in a point of desperation or need, sadly, that's the worst time, because they don't want to fund you at that point because the risk of return on their investment is lower, right? Lenders want to fund to you when they know that they will be paid back. And then I encourage you to look at partnerships, right? Because partnerships are so important. And I know that when we get started, we want to be the boss. We want to be the champions of our initiatives. But if you enter into a cost sharing situation to where you partner yourself with an organization or another business that has the same mission, you guys can be greater together, right? And little money is better than no money, right? So kind of starting those projects where you are able to get small increments of payments towards your business is better than none at all. All right, so I mentioned resources, right? There are so many organizations that can help you if you are positioned in the proper way. So the SBA, and in tandem, you have the SBA and your small business development centers, which is your SBDCs, right? If you have not reached out to these organizations to help you with business funding or the process of, I encourage you to do so. They do have loans and loan structures that can help you, such as 7A lending. They have 8A programs, but you have to be ready for those types of programs, and those organizations can help you. For my business owners that are in more of an agriculture or, rural setting, USDA has grants that are available to business owners. They can do research for you. They can provide you with access to different amenities, right? Because it's not always dollar for dollar, all right? And then I don't know if many of you guys know about this, but Texas Workforce Commission has a skills development fund. If your business is a business that can benefit from a skills development, or you can help in growth and development from a career standpoint, Texas Workforce Commission has grant dollars that they will pay you in your business. However, again, you have to be prepared. So some of these other entities, and I won't call them all out, but you guys are here today on the strength of Texas Women's University. They do grants year round, whether it's for veterans, whether it is for rural, whether it is for, general business practices. But again, if you don't take the time to apply, satisfy the criteria, you'll never have that opportunity. So I encourage you to look into all of these entities. At the very bottom, I put information about some of the internet-based known grant entities and agencies. So you got Hello Alice, they run grants all the time, Women's Net, grants.gov. But you have to understand that there are a lot of companies competing for these small dollars, right? So you don't want to force yourself into a grant commodity where you are only looking to grants to fund your business, because the odds of getting approved for a grant, sad to say, are slim to none, but that does not mean that you cannot have a successful business. All right. So in summary, all right, business funding, is it fact or fiction? So what do we talk about today? Or what are some takeaways? One, there's a lot of things that impact business funding. And it is not limited to, I was not approved for a bank loan, or they didn't give me access to the grants. There are so many things that go into funding a business. So the hope is that you won't single out one source and use that as defeat, because there are other options that are available to you. Sadly, no one is sitting around waiting to write you that check. I wish I could be the person that could do it for you, but there is no entity that is just waiting to write businesses a check or check for their business. And you have to understand the concept of fundability, right? Because if you are not preparing yourself for funding, don't put the expectation on those entities and organizations to make you fundable, right? We as business owners have to take ownership and accountability in that facet. And lastly, external funding should not be used as a means to get started in your business. That term, use other people's money, usually that is after you've put your own money into it, right? You should look at using funding to grow and expand your business, because no one is paying us to follow our passions. And though that sounds ideal, if it was just that easy, a lot more people would be doing it, right? So it is my hope that sharing that information gives you a couple of different nuggets. So going back to that question of fact or fiction, you have to decide that, right? So the concept of business funding, is it fact or fiction? You have to determine that based on how you approach the funding opportunity. Yes, there are people that are getting funded for their business, but we have to look at what they did to get them to that point. We have to look at what they overcame. We have to look at the channels, right? Not simply, oh, there's money out there, I'm going to go and get it as well. So with that, I'd like to pause and I would like to open it up for questions.
So Darlisa, you had one in the chat from Ashley Green of Serve and Jam. Is there a difference in funding approaches for service versus product or tech-based businesses?
Absolutely. And that is a great question. So yes, I would say that understanding your uses of funds is going to be super important in those areas, because service-based businesses, well, it's kind of hard to prove what you need that funding for, right? Because typically service-based businesses don't have a lot of overhead, right? So you would have to be able to define what those uses of funds are. Product-based businesses, well, it can be inventory, it can be manufacturing, it could be, disbursement, you name it. So that gives you a little more leverage on determining your uses of funds. And then tech-based businesses, mostly when you are looking at the concept of investing or venture type forms, it's the concept of reusability and what they can get as a return on the use of that technology. So yes, there are differences in how lenders probably view the different types of businesses, but it all boils down to uses of those funds.
Okay.
Great question.
Yeah, great question. We always have good questions. Nicola Carr and Captain Kate seconded this one. How do businesses prepare to be fundable?
Great question. So I'm going to say it starts with a great business plan, right? You have to be able to prove your business concept to the person sitting on the other side of the table. So starting with a good business plan and a strategy, and then you want to show traction in your business. What have you done without that funding? Have you hosted classes? Have you had clients? Have you been in the community? Have you put money into it yourself? So they look at all of those factors. Is this something that you are doing and it seemed kind of hobbyist, right? You're just kind of doing on a whim. So you have to, one, research your funders, right? See what they look for. Like, it's okay for you to interview your funders. You don't want to just go to anyone and request funding. So you want to do some research on the organizations that you are asking for funding, and then position yourself based on what they look for specifically. I hope that answered the question.
Awesome. Okay, so Courtney Caesar wanted to say, her question is, you mentioned the length of time in business matters. I'm planning to restructure under an LLC. Will lenders take into account prior length of time in business prior to LLC formation?
So I don't want to speak for a lender, but in my experience, if you can show that you had traction and you had clients and, you had liquidity in that business, it should be okay for you to transition over, as long as you can still prove that that business model is the same, you still have the same clientele, and you are bringing in cash as it relates to that business. So historical data is good to show, as long as it is within the same context. Now, if you're like, I used to run a restaurant and this is my business as a restaurant, but I am deciding to go into consulting, so I'm rebranding to restaurant consultancy, that's two different things, right? Because it's not the same lane. But as long as it is within the same path, I think they'll use that as a historical foundation.
Awesome. And Nicola said, yes, thank you that you did answer her question. Liz wanted to know, what are red flags to watch out for in regards to lenders and investors?
Percentage of ownership, right? If they want way more of your business, that's just like going to work for someone, right? Another red flag is stealing your concept. So understanding your terms, your contracts, and making sure that you are getting what you want out of the deal versus the other way around. If you know that you have a great business concept and you are asking them for money, you don't want it to become where it is flipped and they are majority owner of that company and you're just not getting what you want out of it. Another red flag, and this is just me personally, if they start asking too many questions, right? If they want to pull credit right out of the gate, they want access to your networks, yada, yada, that's kind of red flaggish to me because maybe they're not really interested in doing a deal. And you want to look at historically the other clients that they have served. If their other clients don't look like you and your business, you may want to kind of look at that as well.
Yeah, not all money's good money.
Not all money is good money.
Right. So can you talk a little bit about, could you use like a pitch competition as an opportunity to fund your business?
Yes. Okay. So, yes, pitch competitions can be a means to fund your business, right? But in a pitch competition, you're going to have to prepare. So you're usually going to have to go through some education. You're going to have to get your slide decks together. You're going to have to make sure that it is legit. I will say this though. Please do not use pitch competitions as the way to fund your business, because if you have mastered pitching, that's great, right? And if you can win the competitions and it gets you over the hurdles for what you need, that's excellent. But then when it comes time to real business endeavors and you've been so focused on developing these pitches that now you don't really know how to run that business, that could be a thing too. So use it, understand it, get in there and sell it. But again, you have to know how to use that money that you get so that you're not in this scenario of like, oh, I got to get more money. And now you're back into another pitch competition because you are out of money. But definitely utilize pitch competitions because it's a great way to strengthen your business vision. It is a way to connect with potential investors and business partners in the future. And it helps to connect you with your audience also, but don't use it as your source of business funding.
All right, last question, and I don't know if you're going to be able to answer this. It's probably more of a credit question, but I'll throw it out there. Andrea wanted to know, is this a good time to get business loans? I'm referring to the high prime rates. What would be the benefit of borrowing at the current prime rates in your opinion?
So that is actually a great question. And like Darlisa said, I'm not a lender, but I was recently in a meeting and I'm going to say, I don't know that there's ever a best time outside of interest rates, right, to get loans. What I would say is you have to determine how it is going to impact your business, right? So if the need for the funds are great enough to where you feel that insertion or injection of capital with the high rate will help your business, then okay, then it's a good time. But if you are able to wait a little bit to see if that rate goes down, then I personally would wait, of course, until the interest rate is lower. But you have to determine that based on your business situation. If you can pay it back, then go for it. If not, if you can stand to wait, I absolutely will. Because banks right now, because of the way the economy is, deposits are lower in institutions, which makes their lending a little bit more stringent. So they're not able to lend as freely as they want because the deposits are low because of economic conditions.
Awesome. Well, thank you so much, Darlisa. That's all the time that we have for questions. I don't know if you want to throw your contact information. Awesome. We always love having you as a speaker. You always have such great information. Tracy, did you want to say anything before we go through our events for next month?
Well, I want to thank you, Darlisa. That was great and valuable information. I appreciate it so much. Uh, it always makes me think of something that Holly Burrow, our friend, has said as well. She always says things like grants are a windfall. And I think you kind of touched on that, that just because you apply doesn't mean you're going to get it, and that there's a lot of competition in many of these areas when trying to fund a business. You did a great job pointing out all the different areas and things that people need to do to get funded. So, we love you, and thanks for being here.
Thank you guys so much, and I'd love to connect with everyone. I'll put my information in the chat again, and look forward to seeing you. If you have ever need any questions, reach out.
All right, let me go ahead and launch the poll really quick for you guys to take that. And I'll go ahead and do the announcements while we're doing that. December 12th is our next WomenRISE. That one will be in person as well as virtual. It is capability statement, what it is and why you should have one, with Christina Mortel, our business advisor. We're so excited to have her. And for those of you in the area, Christina will be in person, so you can come and shake her hand and see that she is real. Tonight, we have session 2 of our small business training, Insurance for Small Business, with Amy Norman from Frost Bank. She always gives a fantastic presentation. It's always a lot of really great information, and insurance is important for small business. And then the last thing that I have is, if you were at our headshot event, you should have received your headshot yesterday. Brittany was able to get those out. So if you did not get those, let us know and we'll make sure that you get it. Tracy, anything else?
No, I just want to thank everyone for being here. I do want to also let them know that our small business training is open to everyone, and we will have those afterwards on our YouTube page. But this one about insurance, it really covers things many business owners never think of, and you could be doing things that are putting your business in jeopardy. So if you can't catch it tonight, check out later on our YouTube page.
Awesome. Do not forget that the replay, Darlisa's slide deck and the chat will go out probably later on today. So if that's all we have. So we'll see you all tonight, if you're going to be there. So we'll see you later.
Thank you.
All right.